You've probably seen plenty of investment advice floating around on the YouTubes, but how do professional money managers actually manage money for their real clients? Well, today I'm pulling back the curtains and going to show you actual model portfolios that I use for my actual clients. I'm David Warshaw, certified financial planner at the Wealth Plan LLC. Let's dive right in. But first, if you haven't seen my videos on my core stock and core bond strategies, check that out first. Those are the bedrock of my client portfolios. Today, though, we're going to talk about two of my 6 satellite strategies designed to complement those core model portfolios. They are, drumroll please, the Wealth Plan Top 10 Stocks and the Wealth Plan Themes. Ta-da! Let's first discuss the Wealth Plan Top 10 stock. Well, the objective of this model is long-term capital appreciation. It's an actively managed, concentrated equity strategy. But even though it's actively managed, I still want you to treat this as a buy and hold portfolio, as I think that's how you'll have the best results. Now, for this model, I get the research from Zacks. They've been around since 1978 and are known for their quantitative models and stock rating systems. The time frame for this model is definitely long term, and we hold 10 individual stocks at a time. In terms of a benchmark, we're trying to outperform the S&P 500 index, which is no small feat. Now, I rebalance this model once a year in every January because that's when I get the new lineup of stocks. And typically, the older 10 stocks of the prior year get sold and the newer ones are purchased, but it is possible for them to keep a couple of stocks that they really like. Now, from a suitability perspective, this is definitely a more aggressive and speculative portfolio, really meant for investors who can handle tremendous volatility in the pursuit of bigger returns. Up next is our themes strategy, Wealth Plan Themes. Well, before we even dive into that, what is a theme? What do I even mean by that? Thematic investing is an approach that focuses on big picture trends shaping the future, like artificial intelligence, robotics, cloud computing. There are so many different themes out there that you can invest in if you truly believe in it. So instead of investing by sector or size of the companies, you're really investing in companies positioned to benefit directly from that theme. The idea is to capture growth from the structural shifts in the global economy that can play out over years, even decades. Now, it should come as no surprise to you that the opportunity is big here, but obviously so is the risk. Not every theme or company tied to it will be a winner. And that's why thematic investing usually works best as a satellite strategy along your core portfolio. The objective of the wealth plan themes is definitely long-term capital appreciation. It is actively managed in the sense that I'm picking new themes each and every year, but it's best to be held long-term. Now, the main research provider I use for this model is from a company called Global X. They're based in New York. They were founded in 2008 and now manage over $600 billion across their ETF lineup. Global X is known for their innovative thematic ETFs and has actually received industry awards for pioneering first-to-market ETFs. So they help me identify their favorite themes, and then I go and pick my favorite ETFs to represent that specific theme. Sometimes I'll use a Global X fund, and sometimes I won't. I'll use someone else's. The time frame for this model portfolio is clearly long-term. The model holds around 11 ETFs covering approximately 599 individual stocks. A good benchmark for this portfolio would be the Nasdaq 100 index, or QQQ if you wanted an ETF proxy. This portfolio is rebalanced once a year, typically in the beginning of the year. And like top 10 stocks, this strategy is speculative and is designed for aggressive investors with a high risk tolerance. And just remember, past performance is not indicative of future results, and this is, of course, for educational purposes only. With that out of the way, let's dive into the data using my Koifin analytics platform to see how these portfolios have actually performed. I'm going to tackle the Zacks top 10 first. So when we look at the holdings, this is what Zacks liked at the beginning of 2025. We have Stride, Credo, Dell, Goldman Sachs, Westinghouse, Applied Industrial, Iron Mountain, Mastech, Primo Brands, and Coherent. There is no expense ratio of this portfolio, which is very nice because you have 10 individual stocks. Now, clearly, every year in terms of what they hold changes in January, but if you look at this year, You see that you do have a nice mix of different sectors. So there is some diversification here, but it isn't as expansive as owning, the S&P 500. Most of the holdings here are in the United States, at least for 2025. There is a very small yield this year of around 1%, but I would not invest in this for the yield. It's really a capital appreciation play, as I mentioned earlier. Now, for these 10 names, the max drawdown was 29.19%. But the reality is this is a very aggressive and speculative portfolio. So you could easily see this portfolio drop 40, even 50% or more because it's just 10 individual names. And any one company can, of course, go bankrupt, which would hurt the entire portfolio. Now, in terms of returns, in terms of 2025, assuming you held these companies in the beginning of the year, you were up 19.8% against the S&P's 10.44% as I record this video. When you look back at last year's top 10 stocks, they were holding Stride, CyberArk, Goldman Sachs, Axon, Badger Meter, Ollie's Bargain Outlet, Sprouts, Elf Beauty, Eden Corporation, and Freshpet. So if you held on to the 2024 model, this was up 61.48%. It did incredible in 2024. To put that into comparison, the S&P 500 was up 24.89% in 2024. So it had a monstrous year in 2024. And at least as I record this in mid-August, it's doing really, really well this year. So I've been tracking this portfolio since 2012. I went back and saw what they held and tried to calculate the performance. And since 2012, it has had a really, really strong track record. It's very hard because some of those companies have, gone away. So it's hard to really back into an exact number, but I was very impressed with what I've seen historically and why I continue to use this model for clients going forwards. Moving on to Global X, I mentioned them in the video, but if you look at their lineup and you just see how many different themes there are, it's really incredible. There are so many interesting ideas, for investing. It's really, really exciting. So if you're very into blockchain, you have a blockchain ETF. You could even invest alongside, demographics, millennial consumer. Very, very interesting. Aging population, fintech, cloud computing, robotics and artificial intelligence, more artificial intelligence, uranium. The list goes on. And there are so many different ETF providers that make these types of funds. So it's a very interesting space. With that said, for 2025, I do hold robotics, video games, defense, self-driving cars, cloud computing, just to name a few. In terms of the expense ratio, this is a more expensive portfolio for ETFs, 0.57%. And that's just the nature of thematic investing. These are typically more expensive products compared to a core stock or bond model, which is very inexpensive. It is what it is. You can't really do much with it. As in my experience, you're just going to pay more to get these kind of thematic baskets of stocks. In terms of exposure, you do see this portfolio is nicely diversified across different sectors, but there definitely is a very strong tilt towards technology. These are very technology-driven portfolios. And you see here that the U.S. is the vast majority of the portfolio at 68.9%. But you do have some good international diversification as well here. Max drawdown for this portfolio from a risk perspective is 20.8%. But with that said, these are very aggressive stock ETFs. So just assume 40, 50 plus percent because a lot of these ETFs are on the newer side. They were not in existence in 2008 when the markets really crashed. So this is a volatile portfolio. And now the best part, we're going to look at the returns of how this thematic model did compared to the NASDAQ 100 index. So in 2023, this model was up 11.29%, but it underperformed the benchmark 54.86. So did much better the benchmark against my model. In 2024, 18.31% for my model. This was up 25.58%, the index. So once again, the NASDAQ 100 did better. This year, we're up 21.01% as I record. The benchmark is only up 13.18%. So we're doing a little bit better this year. So the key idea is that we're going to continuously update these themes each and every year, powered by my research and Global X's research. So time will tell if we can actually outperform the NASDAQ 100 index, which has just had some stellar performance over time. And the cool thing about this model is that if you have a strong conviction in one or two themes, whether it's space, lithium batteries, you name your pick, we can blend that into my thematic model so it can become more custom in nature. So there you have it, folks. Two of my 6 satellite strategies, the Wealth Plan Top 10 and the Wealth Plan Themes models. Remember, these models are meant to complement the core strategies that form the foundation of my clients' portfolios. If you haven't seen my core model series, Core Stock and Core Bonds, I'll link it here because understanding the framework is key before diving into satellite strategies like these. As always, thanks so much for watching. I'll see you in the next video. Take care. Bye-bye.